We got to get an appraisal. We got to get
Gotcha.
homeowners insurance. We got to get title work. So there's other things that have to go into. That's why it's a 30-day process. And so I think just knowing that we typically have to verify that you're employed all the way through the process. So we might have to ask for updated pay stubs. We may have to call your employer about 3 to 4 days before closing and say, hey, is Corey still employed? So
Gotcha.
it's little things like that will verify. Once you're closed, you're good. But it's that 30-day window we're going to kind of be verifying several times. Does that make sense?
Got it. Perfect. Thank you.
Absolutely. And the third biggest frustration people have is just missing a close date. Last year, 57% of loans did not close on the day they were supposed to due to some last minute glitch or delay or issue. And so that can be a little frustrating, right? Like you hired movers, you thought you were moving on June 13th and it gets pushed back to June 15th or something like that. That can create some stress and drama. So those are some unfortunate realities of the industry we're in today, Corey. If you decide to work with me as your lender, some things you can expect of me. I guarantee to be super transparent and upfront about my rates and my fees. I do not want you to have any feeling of bait and switch. That's where we're going to walk through the numbers here on the screen in a moment. I'm going to go through everything line by line. I'm going to send you everything in writing so you walk away with a very good understanding of your numbers, okay? Number two is, yes, I will need documents several times, but think of me like the TSA line. I want to make this process as fun and easy as I possibly can. Number three, I guarantee I will close on time or you do not pay me, okay? So I'm here to help make sure this process goes as smooth as possible for you. Do you have any questions on what I just covered, or do you feel like that's a good enough overview for now and we can jump into the numbers?
It's a good overview. I do have a question. How can you guarantee to close on time when there's some variables that you don't control?
Great question. What I would say is, again, I'm thinking of me like a quarterback or an attorney. I'm going to win. Like there are other loan officers, like not everything's created equal. I budget, plan, hold people accountable, make sure I'm on top of it. So what I would tell you is in my career, I've never missed a close date on a purchase loan. Okay. So I always deliver. And so it's just being super proactive, super detailed, holding people accountable, following up, just driving the thing forward. Because there are times, yeah, we may like, think of me maybe like a pilot. We may hit some turbulence, Corey. Like we may potentially have an issue with an appraisal or maybe like something pops up on your bank statement we have to ask you a question about. But like I'm going to land the plane and I'm going to get you there safely and on time. So like I'm committed to making sure that, and that's a big reason why Scott refers me. Like if I were to let you down, Corey, Scott would be very mad at me, right? Like he just would, because it would jeopardize your relationship with him, and he doesn't want that to happen. So I have a high level of accountability to make sure I always deliver. And if I don't come through on my promise, you're not paying me. Okay. Like I will waive all my fees. So yeah, that's just kind of my approach to business. Does that make sense?
Yep.
So what you're going to see here on the screen, and I'm going to email you a copy of this, this is a summary page showing you your numbers. Okay. So we hit this little more info button in the top right hand corner. Let's walk through your monthly payment first. So what you're going to see here is you've got a 3% down option, which puts your payment at $32.39. That is a mortgage payment of $2,100. That's your interest rate times your loan amount. Property taxes is $895. This is a good faith estimate. Okay. Once we actually have an actual property, I will then be able to update this to make this more accurate. But this is the going average for most homes in the Dallas-Fort Worth area. I also put homeowners insurance at $100 a month. I think you're mainly looking at new construction homes. Is that right?
Yeah. Well,
okay.
Yeah, I mean, that's what I'm leaning towards, so I can maybe bypass this bidding war. Like I don't really want to get into multiple offers are being put on this home. You need to put in an offer. We'll let you know by Thursday at 12 o'clock. Like I'm trying to avoid that if I can.
Totally.
But, yeah.
And so why I highlight this is if you buy new construction, typically homeowners insurance is a little bit cheaper. I would say if you buy an existing home, this might push to 150, maybe 175. So your payment might be a little bit higher, okay? But I think on new construction, you could plan for 100 because typically insurance is a little bit less when it's a brand new home. Does that make sense?
Yep.
Okay. Then we have an option here with PMI. So anytime you're putting less than 20% down, typically you're going to have to pay something called PMI, okay? So that'd be $133 a month. That puts your payment at $32.39. With 5% down, that PMI is a little bit cheaper. It's $87 a month. The other numbers would pretty much stay the same. We do offer a special program with 5% down with no monthly PMI. So that's your lowest monthly payment option, okay? But the interest rate is a little bit higher on that option than the standard 5%. So there's a little bit of a trade-off there. So if the lowest monthly payment is the most important to you, I think this is a good option to consider. It doesn't make a difference to me which option you choose. I just wanted you to know there are options. So when you look at the payments here, how does that compare to your expectation? Are you comfortable with the payments?
That's a little higher than what I wanted to spend. Just be honest with you. Like I like having quite a bit of disposable income just with some of the other things that I'm involved in and I do. Could make the payment, but I don't know that I necessarily
Yeah,
want to.
you're pre-approved for it. So
Yeah,
what I would say is you can do it, right? But that's part
yeah.
of the reason I want to do this meeting is, so what kind of payment are you trying to stay within? Because then what I can do is show you options of maybe a lower price point
Yeah.
to get you to the payment you're wanting.
I'll tell you, like right now, for example, I'm paying $1,200 in rent. And so if I could stay in between, and probably on absolute low end, I'm thinking like if I could stay, well, obviously I'll go as low as I can, right? But I probably wouldn't want to spend any more than probably 2,500. That'd be where I'd probably really be comfortable in that space.
So I would say if you're wanting to stay around 2,500, I would recommend going at a $400,000 purchase price with 5% down.
Okay.
Okay. So you're pre-approved for 500, but that's going to push you too high. So that puts your all-in budget about 32,000. Okay. And so how does that compare? Do you feel like a $400,000 purchase price could work, or is that too low?
No, I think that could work.
Okay. So then I would say we probably want to tell Scott, like, hey, I'm pre-approved up to 500, but honestly, I'm probably more comfortable shopping around 375, 400 because that allows me to stay within the payment I want. Does that make sense?
What is that? And so you already calculated my down payment in this as well?
That's right.
Okay.
So this cash to close figure is inclusive of everything. So let's go through that next. Okay.
Okay.
So if we hit the more info button, this gives you payment breakdown. If we hit this button, this is the closing cost breakdown. Okay. So this is your summary page here. But if I hit this little fee detail button here, you can see that 32,000 is made up of three things. Number one is your down payment, in this scenario, 5%. Number two is closing cost. Number three is your escrow account, which I've highlighted here with in yellow with a yes by it. That is your escrow account. Your escrow account is just a fancy mortgage term. Think of it like a savings account that helps you manage your property taxes and homeowners insurance. Okay. So when you close, let's say you close on June 13th, this would buy you homeowners insurance from this June to next June. Okay. But next June, you're going to owe another $1,200 because you got to renew this policy every year. So what we're going to do is help you prepare for that upcoming bill in two ways. Number one, we put $300 in the account at the time of closing to cover the period of time when you close in June to when you start making payments in August. Then you're going to start making payments in August and contribute $100 a month as a part of your monthly payment, so that by the time we get to next June, there's enough money in the escrow account to pay for the renewal. Does that make sense?
Yep.
Same thing goes for taxes. Taxes are going to be due in December. Okay. So in December, the taxes are due. So what we're going to do is put $2,100 in up front. Then what's going to happen is you're going to make monthly payments. So that way, by the time we get to December, you will have enough money in the escrow account to pay the tax bill for the year. Does that make sense?
Yep.
Okay. Everything else you see here listed are closing costs. So Corey, you've got about $1,400 in lender fees, admin fee and processing fee. That's what comes to Summit Funding. You have a credit report and a flood certification. That's what goes to make sure that there's not in a flood zone. You got an appraisal fee to make sure it's really worth what you're purchasing it for. We have a couple title fees. Typically, the title fees run about $800 to $900, but when you buy a brand new home, a lot of times you have to pay this title fee, which is an extra $3,000. So if you buy an existing home, this fee would only be about $100. But when you buy a brand new home, it's about $3,000. Okay, so that's the same way even with this survey fee and this final inspection. Those are fees you typically do not incur when you buy an existing home. So there are pros and cons to new construction. Now, sometimes, there are some ways we can potentially get around that, but high level, what I wanted to do today was kind of show you what to expect on the numbers. Once we find an actual property, we might be able to, improve these numbers a little bit, but this is a good idea of what to plan for in terms of title fees. Now, those title fees are going there to basically ensure that the title is done correctly, making sure all the paperwork and money movement between all the parties is done correctly. The survey is there to make sure the boundaries are insured so that, you're not on somebody else's fence line. So if you add up all these closing costs, plus the escrow account, plus your down payment, that is how I got to $32,000 cash to close all in budget. Does that make sense? Do you have any questions on the closing costs?
I do have a question. So if I do the math, do the 400,000, 5%, that's, I think in my math, I'm not looking at a calculator or anything, but I think it's probably around 20,000. I think that's what I think it's 20,000 bucks.
It would be 20,000. That's correct.
Yeah. So, shout out to my math teachers. I think, and
you get about 12,000 in closing costs.
Yeah, that's what I wanted. So I saw the two bigger options or items. One was like a 2,000.